Good evening. I am Rahul Bansal, second year student of BITS-pilani, and this is the final video report of Equity Research Initiative. The values calculated are my own and have no bearing or responsibility if they are wrong or misrepresents Infosys. Infosys Limited is an Indian multinational provider of business consulting, technology, engineering and outsourcing services. It is the third largest India-based IT services company, and its major revenues came from international business. The analysis of the company consists of three parts: fundamental analysis, ratio analysis and equity valuation. In fundamental analysis, I learned how to do the SWOT analysis of a company and studied Porter's 5 forces. After doing fundamental analysis of the company, I concluded that Infosys is expanding its business successfully, and more than 90% of its revenue are generated from repeat clientele. The company has also been able to maintain one of the highest net margins in the industry, and its best part is that the company is able to convert its competitive advantage of having high switching cost into an excellent financial track record. Now coming to the second part of the analysis, that is ratio analysis. From the ratios calculated below, it can be seen that Infosys is performing much better than the Wipro. From gross profit margin and net profit margin, which is 24.53% for Infosys, we can conclude that the profit margins of the Infosys are much higher than the Wipro. From the current ratio and quick ratio, it is obvious that the liquidity position of Infosys is also much better than Wipro. In fact, it is almost 3 times, and the debt to equity ratio of the company is 0, which is very good as compared to 0.215 of Wipro. In the final part of analysis, equity valuation, I calculated the intrinsic value of the stock using FCFF stable growth model. By using this model, the intrinsic value of the stock came out to be $28.99, while the current market price of the company is $42.35. By seeing the intrinsic value calculated above, I concluded that the stock should be sold because it is almost double of its intrinsic value. Almost 65% return can be expected if the futures of this stock are shorted. The high market price of the stock is most probably because other Indian companies are performing badly, while Infosys is showing profits every quarter and has been declaring dividends regularly. But the repercussions of its slow growth rate will be seen soon. Thank you.